That was the big picture. Now let's have a look at Europe in general. Everybody is talking that perhaps we're seeing some sort of light at the end of the tunnel. How much of an influence is the action by the ECB, and how much of investment is that policy really going to drive into Europe?
I see Draghi taking all the actions that a Fed chairman would take, and I welcome that. I welcome it because the European Central Bank needs to have more bite, needs to have more power, and Draghi is trying to do that, and I'm sure that he's doing it with the consensus of the majority of the members of the Eurozone, and this is good. It's good for the evolution of Europe, it's good for the capability of intervention that is necessary in order to have a solid economy. The euro is a bit too high in this moment, hovering between 138 and 140. And I'm not sure it helps the export. Europe is very much dependent on the export. If you think about the economy of Germany, if you think about the economy of Italy, big manufacturing countries and whose economy is based on export, and the euro at these levels is not good. And it's also not reflecting the real trends of the economy, because if you look at the US economy, is performing in this moment better than the European economy. Of course, the influence of the quantitative easing and all the money that is floating in the United States is clearly having an influence on the exchange rate, and I hope that this one is going to change on a relatively short term. We talked about France before, saying that France is still going to be a risk unless a certain kind of reforms is going to be implemented, and you talk about cutting the cost of the government, labor reforms. There are several different things that the Hollande government has to do. Germany continues to perform in a very good way. It's not 3-4% of growth, but it is a solid performance, and it continues to be the engine of the European economy. If you look at the UK, is improving the performance, helped by the discoveries of the oil in the North Sea, which is also reflecting very positively on the economy of Norway and the Nordic region. Central Eastern Europe in this moment is shaken a little bit by the situation of Ukraine. There is a certain concern from many people, not General Electric, but from many people about investing in that part of the world. Everybody wants to see the Ukrainian situation being, calming down. And I would say that the Ukrainian situation is calming down. Putin has played a very, very tough game, but he didn't have too many cards in his deck. I see the actions of Putin as more of a sign of weakness rather than a sign of strength. Weakness determined by the fear of having Ukraine becoming a NATO member and having a NATO member being bordering with Russia, and also the fear that what happens in Kiev today might happen in Moscow tomorrow, creating problems for his position and for his leadership. Now, Putin has seen $70 billion worth of assets getting out of Russia the moment that all these actions started. So he has got to be careful. He has also got to be careful because he cannot play the oil on, oil off for Europe, because 80% of the GDP of Russia depends on the raw materials, and he needs to have the revenues of oil at $100 per barrel in order to keep the momentum of his programs that he has initiated for the good of Russia, but also for him to stay in power. So this is a little bit of the picture. I'm sure that I'm missing something, but this is a little bit of a general picture.